Hello, lighting people. Here at Inside Lighting, we're constantly tracking a myriad of economic indicators that affect lighting people like you. However, I can't recall a time where I've been so uncertain about the future direction of lighting industry markets. Architectural billings are down, construction starts were slightly down in 2023, but finished strong, interest rates are high but stabilizing, and on top of all of that, it's an election year. So, considering all these mixed signals, we thought it would be a good idea to connect with someone who spends his days and nights analyzing the United States construction economy. So we're pleased to be joined today by Richard Branch, Chief Economist for Dodge Construction Network. Richard, hello, and thank you for joining us once again for 5 Big Questions.
Al, thanks for having me on. It's great to see you again, and Happy New Year.
Happy New Year to you, and thank you for helping us and all the lighting people in our audience clear up all these things that are happening as we start 2024. I don't know what to make of it, so let's just start kind of big picture, Richard. What are your general thoughts and observations about where we might be headed in 2024 for the U.S. construction economy?
Yeah, it's an interesting time to be alive, right? And to be looking through some of this data. I think the best place, if we want to talk about moving forward, I think the best place to start with is looking back and look at what happened in 2023 and talk a little bit about why it happened and why we think 2024 will be a little bit different. So when we look back on 2023, total construction starts, so that's non-residential buildings as well as infrastructure, actually fell 4% in 2023, but it was kind of a two different roads that the sector took. Non-residential buildings were down, residential buildings were down double digits in terms of 2022 to 2023, but that infrastructure market was very positive. It was up around 18% year over year, thanks to all those infrastructure funds, right? So when we think about what impacted particularly the residential and the non-residential building side of the sector, it really comes down to a small handful of negatives that were impacting the market. First one, of course, is interest rates, right? And you mentioned that they were high but stable, but high interest rates, of course, curtailing, particularly on the residential side of the market and the income property side of the non-residential building space. We are also dealing with particular very tight credit standards from lending institutions into the non-residential building space. Then we also have the restraint of the lack of skilled labor within the construction sector to get things done. And then finally, we just have material prices that remain elevated relative to where they were prior to the pandemic. So that was the lay of the land that pushed construction a little bit lower there in 2024 or 2023, excuse me. The question then is, okay, what's going to change when we think about 2024? And maybe start with the bad news first, and then we'll end the question with the good news, right? Or end the answer with the good news. The bad news is around labor. There's no shock. I think if you did a survey of just about anybody within the construction space, whether architect, GC, building product manufacturer, their key concern in terms of the economy, in terms of the construction economy right now, is there's just not enough workers. And that's not going to change, right? That's a long-term systemic issue that the construction sector is going to face for the foreseeable future. And it really does limit how much activity we can get done, not just in 2024, but beyond. So that's the bad news. Let's push that away. I think on the good news side, if we start with prices, we are seeing some relief on material prices, from a growth rate perspective. It's doubtful that they'll get back from a level perspective to where they were prior to the pandemic, but at least, the price increases have calmed down to what we would consider normal, right? 2 to 3 to 4% year over year, which I think most people in the industry can deal with in terms of their planning. So the next two issues, I think, is where we're going to see more significant change in 2024. And the first one is interest rates. So you mentioned that they're high and they're stable. And I think there's growing signs here that the Federal Reserve is done, right? We're seeing if you're Jerome Powell and you're the chairman of the Fed Reserve and you're sitting in your fancy office and you're probably looking at the economy and saying, inflation's doing essentially what we want it to do. Maybe not as fast. Maybe it's not coming down as fast as we want, but generally it's going to script. So I think that sets the stage as we get into particularly the back half of 2024, where the Fed is going to pivot and start lowering rates, start cutting rates. Now, that's going to be a very slow process. We don't think rates go all the way down to where their equilibrium rate is until around 2026. But at least that change in tone for the construction sector, which, right, is a very interest rate sensitive portion of the economy. Those lower rates will start to stimulate activity. And when you think about the Dodge Momentum Index, right, that's a leading indicator that we put out, and it measures the dollar value of projects, non-residential building projects, when they're sitting in planning. That's very high and very stable right now. So there's a lot of projects sitting in the queue ready to get going. And those lower interest rates over the course of 2023 will be supportive of growth within the non-residential building space. The credit standards, I think, will start to ease a little bit along with interest rates coming down, but there's a little bit of a concern over just a lot of the bad loans made, particularly into the office sector over the past couple of years. So we won't see the lending spigot open right up, but it should be a little bit better. But again, I think the overall tone here is a much more positive 2024, thanks to much more supportive interest rates.
What a great roundup of economic data points around the horn, and thank you for the good and the bad and the uncertain aspects of it, because it's all we can assess is the facts as you
Right.
see them. So thank you for sharing that. And yes, the Dodge Momentum Index, we look at it monthly, we publish it monthly, as well as your construction starts data, which a lot of us find very useful. And in a snapshot, the numbers for January might not tell you everything, but the trends over 3, 6, 9, 12 months helps us really understand where some of those things are going with respect to the data that you folks put out, which is very helpful. You did mention inflationary prices over kind of the long haul of pre-pandemic, which is now going on 4 years ago, and that's been one of the pain points. And some things that you look at, like price of lumber, isn't going to really affect the lighting people in our audience, but things like steel and logistics do as well. With the Red Sea situation, there's other cost pressures that could be out there right now, aside from the ones you mentioned that are related to interest rates. So when you think about cost pressures that we didn't discuss yet, as well as lead times. For instance, electrical and lighting are very connected, and there's still like electrical transformers and switchgear that have 50+ week lead times in certain categories. So how do you see that in a macro standpoint affecting the construction economy, those two factors?
Yeah, I guess maybe I'll just speak to one of the first points you made about lumber prices and how it doesn't necessarily impact the lighting people. I would say they're all somewhat interrelated, right? Because if you're a developer, if you're an owner looking to say, can I move forward with a project? You're not just looking at one price, you're looking at a suite of prices. So even though the pricing might be more favorable for lighting or metal or steel, if the lumber is what's pushing that project over from being a go to a no-go, it does certainly have an impact, right, on lighting products and subsidiary products. So, but in terms of the project delays, spot on. If you think about what we saw over the course of, I'd say, 2020 through to 2023, is we did see an elongated construction cycle. And for us, that really starts in the planning phase when architects and GCs are assigned to the project and plans are being drawn up and products like lighting are being spec'd all the way through to breaking ground. In terms of what we saw, though, in 2023 specifically, we saw the public building kind of projects. So we're talking education, health. They slowed down a little bit, but it was really into the private side of the building market. So we're talking multifamily, we're talking hotel, traditional office sector projects, all slowed down. Now, there's really, again, there's this handful of reasons as to why. It could be people, right? I can't find the people to get the project started. It could be the prices, like we were just talking about, but it could also just come down to plain old market demand. Right. And when you look at, again, what's going to change in 2024 is I do think the interest rate environment will be more friendly. I think prices will be a little better, but I do think demand will also start to shift a little bit more to the positive, particularly for education, particularly for healthcare, and even into hotel. But we do need to keep in mind here that sectors like the office sector and the warehouse sector are going to be down and out at least for a couple of more years. So what that means then is I think as I look at that construction, that life cycle of a project from origination all the way through to occupancy, I think this phase that we're in now of that elongated cycle is unfortunately the new norm, right? And from a business planning perspective, that just makes it more difficult. Again, whether you're an architect, whether you're GC, or whether you're trying to get your lighting product spec'd into a project, it's something we need to get used to, that process to get your product spec'd into a project might be a little bit longer. And I don't think that's going to change anytime soon.
Yeah. One of the things that frustrates the lighting industry sometimes is the long sales cycle we have from
Right,
specification to order, because lighting fixtures, as you know, are one of the last things to be
right.
purchased on the trajectory of a project. But I can't ignore the fact that you've mentioned commercial office a couple times, and the last time you mentioned commercial office in the context of that and warehouses, that it's going to be
Yeah,
a long, slow road for at least the next couple of years. I believe I heard you say. Let's dig
yeah.
a little deeper into that. One of the statistics I saw recently was that commercial office occupancy nationwide is at its lowest point since
Mhm.
1979. That's a long time ago, Richard. So
Yeah.
when you think about that sector and how important that is to not
Mhm.
just lighting, but to so many parts of construction, let's dig a little deeper. What's your prognosis for the sector of office space in the U.S. right now and in the
Yeah.
foreseeable future?
Unfortunately, the patient's not doing well. I think the office sector is going to continue to struggle for the foreseeable future, and for us, that's probably more into 2026, where we start to see maybe a flat or to a bottoming out of the office sector. When you look at you mentioned the drivers there. When you look at, say, office occupancy, whether that's key card swipes or whether that's vacancy rates, they've really gone nowhere but to the bad. We continue to believe that the remote and hybrid options are here to stay. So that really does impact how you might think new build out and how the office sector will play from here on out. But I'd break the sector maybe into two, right? Because there's new construction, right? I'm going to build a new office tower, a new suburban office park, versus I'm going to reno a project that's already there to make it more amenable to people moving in. I think the new side of the market is going to get hurt bad, right? And that shouldn't be shocking to anybody listening, that new office build out is going to be particularly weak. But here's where I think it gets a little bit more interesting to the lighting folks is that I think that reno side of the market should hold up okay. It might be a little bit weaker than it was a couple of years ago or even last year, but relative to the new construction, I still think there's lots of opportunity in that renovation space. And that's a big market for lighting, right? If you're going to gut an office project and redo the interior, lighting is a big part of that. And if you look at the data in terms of our starts data, historically, that renovation side of the office market is only about 30 to 35% of total office construction starts. But over the past couple of years, it's hovered closer to 50% of all office construction. So I think that trend holds for the foreseeable future as the new construction continues to tank. I think again that reno side of the market is going to hold steady. So it's about finding the nuggets of positivity by digging deeper into the data, right? And that's where I think some of it is in terms of office is that reno side. I also like to point out whenever I talk to anybody about the office sector, right? Because you pointed out an article and it's in the news, right? CRE doom loop and all these things. But what I like to point out is, and this is a great thing about our data, which goes back into the 60s, is that the office sector, technically, from a cyclical perspective, has actually been in decline since the 80s, right?
Huh.
We're using less and less and less office space each cyclical peak. And so, what happened in the pandemic, and I may have used this before, so I apologize if I use the same joke, but I tend to think of it as spinal tap, right? The pandemic just turned that rate up to 11. And so that trend was already there to using less office space and building less office space. It just accelerated under the pandemic and unfortunately took it a notch lower.
Great insights and great Spinal Tap reference. I love that scene. Um, and I love also the insights onto the renovation side, how that's a
Yeah,
bigger piece of the pie chart right now. Structural steel people might not like to hear that, but on the lighting side, that's
yeah,
actually
absolutely.
refreshing to hear. So
Yeah,
really great news there. And let's talk about one more sector
sure.
that you mentioned earlier, and that's the warehouse side of things. One thing that I find really interesting in some of your reports over the last couple of years, or maybe even 2 or 3 years, has been that there's one particular end user, one particular owner that's really moved the needle significantly on the entire U.S. warehouse sector. Let's talk about that and what you see for the warehouse sector moving forward.
Yeah, let's talk about that guy, right? So we're talking about Amazon here when we talk about offices, right? So our
Warehousing.
construction,
Yeah.
our construction starts time series goes back to, as I mentioned, 1967, and starting in around 2018 or so, Amazon really put their foot on the gas in terms of starting to build out their logistics infrastructure. And much like we were talking about Spinal Tap and turning to 11 with the pandemic and remote work, the pandemic did the same thing for warehouse and e-commerce, just in the opposite direction, right? It really sped up that development. And so 2019 was a record for warehouse construction. 2020 was a record. 2021 was a record. 2022 was a record. And sizably so, not by a little bit. But we noticed something in 2022 that I don't think a lot of other people did, just because we're tracking these projects and planning. But essentially what started to happen in 2022 is Amazon stopped putting projects into the planning queue. And so we were pretty happy and confident at that, not happy. We were pretty confident at that point to call 2022 as the peak year. And then Amazon came out, I think it was in early 2023, and said, yeah, we're tapping out in terms of this building cycle. We got what we needed, and we're going to sit and wait and watch it all develop. So at that point, at that peak of the market in 2022, Amazon was about 16% of all office construction. So by far or warehouse construction, by far and away, the biggest player in the field. And as they've stepped out of the market, essentially what we've seen is the whole warehouse sector took a level step down as that correction took place. I'll point out, though, that much like I point out with the office sector, when you look at this historically and you look at what we're projecting, say, for 2024, or even what happened in 2023, where the market fell double digits, is the levels of activity here, even without Amazon, are still much higher than they were prior to Amazon coming into the market. So there's still other players out there building logistics infrastructure, just not as big a players as we saw with our friends at Amazon.
Excellent insights. And yeah, I guess anecdotally, it feels like there's still good activity on the
Yeah.
warehouse side. And when I see a crane or steel going up, I don't know who's the owner necessarily. So, and I do live in an area in Atlanta where there's lots of, it's kind of the southeast junction point for a lot of places to warehouse down here too. So, good insights on that front. And then I wish I had 7 more questions, but we only have one more left, Richard.
All right.
So I guess just kind of more of a catch-all. I know we've talked about
Yeah.
some specific sectors, but do you see anything else that we haven't yet talked about, whether it be
Yeah.
a vertical market or
Yeah.
a geographic region where there might be some good opportunities in the near future?
Yeah, I think when I look at the verticals for 2024, I would say the strongest verticals are manufacturing, right? Lots of money from chips and from the Inflation Reduction Act pouring into that market. It's these big EV battery plants, big EV plants, chip manufacturing facilities. So that's going to be a growth market for sure. Data centers, right? Data centers are becoming more important, not just because of, say, storing podcast files and whatnot, but also because of this push towards AI. That's going to require a lot more cloud computing than, say, we were used to a year or two ago. Clinics. So here we're talking like the urgent care centers and the dock-in-a-boxes and those kinds of facilities. That's going to, I think, be a growth driver in 2024, particularly as we start to see the single family market pick speed up again. And then finally, I would put in the positive bucket life science lab type of facilities, right? That was a big growth engine in 2023. I think that continues into 2024. From a geographic standpoint, the way I always look at this from a US perspective is essentially, right, think about what we do in construction, right? We build things for people. Well, where are the people? And those demographic growth trends are particularly positive when you start, say, in the Carolinas, down through Florida, through Texas, and into the Pacific Southwest, maybe excluding California. People actually seem to be leaving California just because of the cost. So I think those growth areas, I think those are the key areas for growth. But I think we also need to play the game of new versus reno, right? As we were talking about with the market or with the office market. When you think about that area of the country, the South and the Southwest, that's mostly new construction, right? Because that's build out to feed new population growth centers, as opposed to, say, the Great Lakes states, the Northeast, the Mid-Atlantic. That's going to be more, I think, on the reno side of the market because the building stock is older, and that you might not have the strong demographic growth. So, well, instead of let's build new, let's gut and renovate. So, there's a lot of nuance in the data here, but what I always try to tell clients when I'm talking to them about the economy is, there's a lot of positivity in the market right now. It's really nuanced, and you might have to work a little bit harder to find it using, whether it's these data cuts of reno versus new, demographic growth across the country. There's a lot to think positive about here for 2024.
Richard, what an amazing kind of walk through the big picture to some of the smaller slices of all the things you deal with. And I know that you folks can get really granular when it comes to specific projects and phase 1 and phase 2 and phase 3 of these other projects that you work on. There's so much data that you manage and your company and your firm manage that it's really a pleasure to hear your insights from your educated and knowledgeable perspective. So on behalf of all the lighting people who probably benefited as well, I want to thank you for joining us today for 5 Big Questions.
And my pleasure. Great to see you again.